Connect streaming. Okay, so let's go live now. So we are live now. That's awesome. So we are live now. We are live. We are live. How's your day so far? How's your day so far? We are live. We are live. So let's see who is there. Daniel, thank you. Welcome. Thank you. Welcome. Nurse, welcome. Welcome. Esther, that's awesome. So today is going to be an exciting day. Today we're going to talk about how to avoid unnecessary IRS penalties with effective business record keeping, right? Many a times people, incur unnecessary fines from the IRS because of, ineffective business record keeping. Welcome, OEMG. I struggle to pronounce it. That's awesome. Now, so let's see. How's your day? How's your day so far? So who's had a great day so far? If you've had a great day so far, please just type in great. Who's had a great day? Right? If you've not had a great day, it's fine. It's going to be things will be better. Don't worry. Right? So awesome. Now, please invite your friends. Right? The things that we cover are things I don't know anybody. Right. Hey, there is like, oh my God. Right. So awesome. So I don't know anybody on social media who does what I do. Right. So my goal is to educate you guys, empower you guys so that you can avoid making unnecessary mistakes, costly mistakes. Right. So that's awesome. So we're going to start. We're going to start. So real quick. I don't think so. We're going to start for future sessions. Please do invite your friends, your loved ones, your family members. If you know anybody who is a business owner, they are definitely going to benefit from this. So for those who are logging in for the first time, I'm going to introduce myself. So my name is Jerry Pani, right? So I have been an accountant for 18 years. I've been in public practice for 18 years. I love what I do. Not just accounting, I'm also a finance expert. Very few accountants are finance experts. It's very hard nowadays to see accountants who are finance experts, right? So I've been a blessing to many people, many nurses whose finances and lives have been transformed. Many of them have gone into businesses. Many of them have gone into real estate, acquired investment properties. And, I love being a blessing to people. Many of them started businesses, like I mentioned before. Many of them have made mistakes. Many of them always try to seek advice from me. I do this all the time, right? I like to be a blessing to people. So again, I'm not just a finance expert, I'm also a tax strategist. Not all accountants are tax strategists. Very few CPAs are tax strategists, right? Most people don't understand the difference between a tax preparer and a CPA or accountant and a tax strategist, right? So I'm just going to make it. This is again just to educate you guys. Accountants are tax accountants. I've been an accountant for 18 years, right? So this is how we work. You give me your records, and I'll show you how to not break the rules, right? How to not break the tax code. That's what accountants would traditionally do, right? If you look at tax preparers are just like machines, right? You give them your tax records and they file your taxes based on the information that you have given to them. So one of the things I say is that do not blame your tax preparer if you have a high tax liability. Their role is not to reduce your taxes. Their role is to process your tax return based on the information that you have provided to them, right? So don't blame them if you have a high tax liability or if you have a low. That's not what they are there for, right? Now, tax strategies, on the other hand, are there to show you how you can use the tax code to your advantage, right? There are certain things I don't like to say publicly, just because obviously, I'm a licensed expert and I'm not going to lose my license for anyone, right? So So that's kind of the difference between. So you want to see your tax strategist as Donald Trump's tax advisor, right? Awesome. So today we are going to start real quick. We're going to talk about business record keeping, and this is absolutely critical. This is absolutely important, right? Welcome your psyches. Now, what is business record keeping, right? The Airbnb welcome. What is business record keeping? If you want to avoid penalties, fines from the IRS, you need to have effective business record keeping. You need to have what we call good practice, right? So, I'm just going to try and make it simple. Now, for those who are joining, if you have friends who are business owners or who are aspiring business owners, please invite them to attend to these sessions. I'm sure you don't want to be blessed by yourself, right? Mika, Pika, welcome. So, business record keeping basically refers to the systematic and organized process, right, of collecting information, storing that information, and then managing financial and operational information for your business, right? It involves documenting various transactions, activities, and events, right, that occur within the business to maintain an accurate and comprehensive record of the financial health of the business. Now, welcome, Nurse Danny. Welcome, Bryce. You see, one of the reasons why people get audited is because people, you see, the IRS is going to say, what did you spend this money on, right? People don't have any records. They don't have any history of their activities. People just do things randomly. Now, one of the things that you have to avoid as a business owner is commingling of funds, right? You need to have a dedicated business account for your business, right? Now, that is what that's what business record keeping is all about. Now, the fact is that business record keeping serves multiple purposes, right? So think about it. If you don't have an effective business record keeping system in place, how are you going to make effective decisions for your business? How are you going to analyze the financial position of your business, right? So why is business record keeping important? It's important for decision making. You need to decide, is my business growing, right? Am I breaking even? So those are things that you need to be aware of, right? So that's why you make those important decisions, and also analyze and evaluate the performance of your business. Now, the law requires that we need to have effective business record keeping systems in place, because it's a legal requirement to keep business records. I'm going to talk about that in more detail, right? Somebody says commingling to mean separate cash too, or just know from your statements. So what do I mean by commingling of funds? So let's say that you're a business owner, right? As a business owner, you need to have a separate account for your business, but you have to be careful. Now I need to break it down here. If you are a C corporation, an S corporation, or an LLC, the bank is going to easily open an account for you once you have your EIN. Are you with me? But if you are a sole trader or a sole proprietor, right, trading in your name, yes, you can still get, the bank will likely, some banks you may struggle with that, right? Some banks would open a dedicated account for your business, right? As long as you have a good business plan, right? So commingling of funds means that what? You have an LLC, right? And you have a credit card for your LLC, and you are using that credit card for your personal shopping expenses. You go to Walmart, you buy things, personal things, using your business, and then you're using your business checking account like it is your private checking account. Now, I have seen that. I've been an accountant for 18 years. I've seen all sorts of things. So that is what I mean by commingling of funds. You have to separate your business from yourself. So those are the things that the IRS will look into and before they would decide the severity of the penalty, right? So, like I said, having an effective business record keeping system in place is because of legal requirements. You have to comply with the law. So let's look at how long the IRS requires you to have to retain records for tax purposes. Now, this is where it becomes very, very tricky. Now, I hope you guys have a pen and a piece of paper. This is absolutely very important. How long does the IRS require a business to retain their records? Now, you see, the IRS provides guidelines on how you need to retain your records, right? But you see, the recommended reporting retention period varies depending on the nature of the documents, right? So let me see. Someone is asking a question. So how do you pay for your personal stuff? Okay, so don't worry. So let me just, because I want us to kind of keep within the time frame that I've reserved for this session. Let me just go through what I have, but keep asking your questions, please. Keep asking all your questions. I'm going to answer them one after the other, right? So don't worry about that. I'll get to your question. So, okay, um, okay, Woodmana, welcome. Thanks for joining. Right. So we're talking about business record keeping and how to avoid unnecessary fines and penalties. Now, these are the guidelines that the IRS will normally provide to everybody, right? For things like tax records and supporting documents, the IRS expects you to keep your tax returns and supporting documents for a minimum of 3 years after the filing date. Now, I repeat, for your tax returns and the supporting documents, the IRS requires you to keep them for 3 years, right? Now, so not knowing the law, if you don't know the law, then you cannot blame the IRS. The law is there for people to read and make use of it. So you can't go to the IRS and say, oh, I didn't know I had to keep these tax returns and supporting documents for 3 years. Then you have to blame yourself, right? Now, you also have things like employment tax records. So if you have like employees, right, you need to retain employment tax records for at least 4 years after the tax returns, the tax becomes due or is paid, right, whichever is later. So you have things like payroll taxes, Form W-2s, Form W-4s. So let me tell you guys, it's a legal requirement that employers must keep W-2 records for at least 4 years. So even if you left an employer 4 years ago and you've not filed your taxes for 4 years, legally they need to have those records. So they should be in a position where they can provide you with your Form W-2s because it's a legal requirement. Are you guys with me here? Now, another thing we can look at are business asset records. So let's say that you buy, what is an asset? An asset is something that is tangible. It creates value, right? So and then it depreciates. That's what a business asset is. So you have to keep records for business assets such as like property, equipment, until this asset is disposed of, right? So because these records are important for computation of things like depreciation, right? Or maybe calculating gains or disposals of these assets. That's why it's absolutely important. So let me just kind of share a little story. Somebody reached out to me yesterday. I hate working on weekends, but at times I always like to be a blessing to people, so I go out of my way. Right? Somebody reached out to me and they actually paid someone to do your taxes, and this person never filed the taxes for 2 years. Now I'm getting to fix this mess that has been created, right? I don't know why people always come to me when they have problems. But yes, so that's the situation. Now think about it. I need to file 2020 tax return for this guy, 2021. Think about it. That is why you need to retain these records. If you don't retain these records, how will I do things like depreciation on these assets? That's why record keeping is important, especially if you have an asset that needs to be depreciated, right? So Other records would include things like expense and income records, right? You need to have supporting records for your income and expenses for at least 3 years after the filing date of the tax return. Remember, expense records at least 3 years, things like that. Now you also have things like records of for bad debt deductions and things like that. Now it says that what you need to keep documentation supporting bad debt deductions for 7 years. Ricky Monet, welcome. You have to keep those records for 7 years. Ignorance is not an excuse. Ignorance is not an excuse. Okay, thank you. I was just drinking some green tea there. So ignorance is not an excuse. You not knowing these things, you have to blame yourself. Now, you also have to keep, like I mentioned before, you have to maintain employee records for at least 4 years after the employee's departure. Now, you need to maintain employee records for at least 4 years after the employee departure, right? The hailing call, welcome, thanks for joining, right? You have to keep employee records for 4 years after the employee's departure. So there is no reason why an employer should not be able to give you your Form W-2 if you left a job 4 years ago. There is no reason, except they've gone out of business or maybe bankrupt or something like that, right? Awesome. Now, who is enjoying the session so far? Who is enjoying the session? Who is having fun, right? Now, another thing I want us to talk about today is what are the key components of business record keeping? Business record keeping. This is going to be, it's a lot of information, I do understand. And trust me, a lot of you guys would have to watch this video once I publish it, right? Because it's a lot of information, I do understand, right? Now, think about it. It says, so some of the key components of business record keeping, I'm going to just kind of go through a couple of things that you guys need to understand, right? Number one, we have what we call financial transactions. Financial transactions. So you need to document your transactions accurately. How much am I having in sales revenue? What are my business purchases? What are my business expenses? What is my income? Shanae, welcome, right? So we are looking at financial transactions. So those things have to be recorded. Now, the other business records, that the other component of effective record keeping, which I'm going to emphasize on. I want to spend enough time talking about these things because this is where people get confused. But before, I think I'll talk about this last. I'll talk about this last. So I'll just go to the other business, the other components of business record keeping. What is it about, right? Bank statements. You need to keep a record of your bank statements, and you need to do regular reconciliations, right? You need to ensure that you don't have fraudulent transactions, right? Look, let me tell you guys, if you don't take care of your if you don't take care of your business records, you're not doing yourself a favor. You need to regularly monitor your business account or your business bank account to ensure that all business transactions have been authorized or approved. If you don't have the time to do it, you probably have to pay somebody to do it, right? We're going to talk about, many people always ask me, but what is bank reconciliation? Now, who knows what bank reconciliation is all about? Can you guys put in the chat box? If you know what bank reconciliation is all about, just put yes, please. CJML Network, thank you for joining. So who knows what bank reconciliation is all about? Bank reconciliations. Who knows? Who can tell me what it's all about? Right? Who knows? Does anybody know? Now, if you don't know, say no. If you don't know, please just put no in the chat box. If you know what it is, please put yes in the chat box. Right? Okay. Shanae says no. Who knows what we mean by bank reconciliations? Bank reconciliations. Who can tell me what it is? Bank reconciliations. This is awesome, right? Everybody is saying no, 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 no. What is bank reconciliation? What do we mean by bank reconciliations? So I'm going to kind of dive a little bit into what we mean by bank reconciliations. So bank reconciliations. So let me go to the basics first. In accounting, we have what we call books of prime entry, right? Books of prime entry would be like your sales ledger and your purchase ledger, right? So, for example, a sales ledger is going to record all the sales of the business. When you raise an invoice for your business, it's going to be posted on the sales ledger or in the sales ledger, right? Now, if you're buying, for example, a piece of equipment, right, you are going to pay the supplier or whoever you bought this from. So if you bought something, for example, from maybe a TV for your business, right, and you used one of these companies, you are going to have to pay. So they are going to send you an invoice for that purchase. Okay, let me take a good example. Let's say you have a hair salon, for example, right, or a beauty parlor or anything. So you buy, for example, all this hair that women like, these artificial things that, all those female products, all those kind of stuff. So what you need to do is that you, as a business owner, you are going to buy it from your supplier, right? The supplier is going to give you an invoice for you to pay them. Now, what you are paying for, you're paying for purchases, right? Or you can call them inventory for your business. It's also called as stock, right? So that transaction, which is an expense, will now be recorded in your on your purchase ledger, which is a book of prime entry, right? Now, so what is bank reconciliation? Bank reconciliation is just a way to ensure completeness of accounting transactions. So if usually people do that a lot with sales and purchase invoices, right? So let's say that I raised an invoice for $1,000 and a client paid me only $500. So I'll go through my bank statement. My goal is to reconcile, and GRN welcome. My goal is to reconcile all my sales invoices to ensure that they have been paid in full. So I'm going to look at all the sales invoices, and then I'm going to look at all my bank receipts. I'm going to see, are the payments complete? Okay, this guy, I raised $1,000, but he only paid $500, right? So he owes me $500. That's the process of bank reconciliation. And then if you were buying goods from a third party, right? So you will now look at all your purchase invoices, right? And then you want to make sure that you've paid all those suppliers. You've not overpaid them or underpaid them, because it happens. Trust me, it happens. So bank reconciliation ensures that the information is complete, whether it is from a sales perspective or it is from a purchase perspective. You don't want to be overpaying people or underpaying them. That's why bank reconciliation is absolutely critical, right? So that's why checking your bank statements regularly and reconciling them is absolutely critical. The other key components of business, record keeping would include things like, payroll records. You have to maintain all these things that have to do with employee compensation and so on. And I'll give you guys a good example. Like when COVID came, people were applying for these PPP loans and they were asking for payroll records. So imagine that you didn't have these records. Now, how would you be able to qualify for these things? Now, but the sad reality is that many people falsified their records and they got arrested and they went to jail, right? But we are not talking about those kind of guys. They are crazy people, right? Now, also tax records, you have to make sure that you keep the right tax records, right? Things like contracts and agreements, those are things that you have to keep. You have to keep a record of your assets and inventory. Now, assets is absolutely critical because, like I said, assets can give you strategic tax advantages because you can claim depreciation on these assets. Now, some people are going to say, oh, what is depreciation, right? So depreciation is, so let's say that, okay, this is my phone, right? This is my phone. I bought this phone for about $2,000, right? Every asset has what we call a useful economic life. So that's an expected life that is based on IS guidelines, that this asset is going to be losing value, right? So let's say that you have a phone and you are depreciating it over 3 years, for example. It means that if it's, let me make the math easy, if it's 1,500, that's $500 per year. You can get accelerated depreciation, section 179, but those are different tax strategies, right? But what I'm trying to say is that having a record of your assets. Now, if I am doing your taxes, the things that I need to know for any asset, we need to know the make and model of the asset. We need to know when you bought the asset. We need to know the cost of the asset, and if possible, a description of the asset. That is what I call good practice. Good practice. It doesn't help me if you just give me, you say, Jerry, I bought this X for X amount. It doesn't help me. We need to know the make and the model, because these are the questions that, if God forbid you were audited by the IRS, you are going to have to be, you have to provide this information, right? Now, I'm going to talk about inventory, right? I hope I'm pronouncing it right. Inventory. In the UK, they say stock, right? So inventory, it means that what is an inventory? Who knows what inventory is all about? Who can tell me? Who knows what it is? Right? So inventory is basically something that you buy to sell, right? So let's say that you are buying, something like this for water, right? So inventory means you buy a bunch. Okay, let's make it easy. TV. I like to use TV sets. You buy 1,000. Let's say you buy 500 TVs. Okay. Let's say this. Your goal is to sell 1,000 TVs in 2024, right? Maybe in January you say, okay, my goal is to sell 1,000 TVs, right? In January my goal is to sell 10 TVs as an example. You probably would have to buy the 10 TVs, right? So you buy goods and you sell them. You buy and sell. At the end of the year, this is absolutely important. If you have a business that deals with inventory, buying goods and selling those, goods, you have to do what we call stock take. You have to keep a record of your stock. So which means that we have what we call opening stock and closing stock. Opening inventory and closing inventory, right? Closing inventory is the cost or the value of the inventory at the end as of December 31st of the relevant tax year, right? So let's say that I was doing your tax return for 2023, right? And you bought TVs or many those things that women like for their hair and all those things, because you have a hair salon as an example. Some of those things you would not have sold them by December. So we need to know the cost of those assets, of the inventory, right? They are not assets of the inventory. So that's what we call inventory records, right? Now, we also, other components of business record keeping will be financial statements, chart of accounts, looking at your your income statement or your profit and loss account and all those things. Now, who knows what a profit and loss account is? Now, if you know what a profit and loss account is, please put yes. If you don't know, you say no. Who knows what a profit and loss account is, or an income statement, depending on where you're reporting? Who knows what it is? Who knows what it is? So what is a profit and loss account, or what is an income statement, right? Awesome. So I'm just going to make it simple. It's just basically your income minus your expenses. This is just basic, right? So, but we have what we call your sales revenue minus the cost of your goods, the cost of sales, the cost of your goods. So we'll give you the gross profit. When you take out expenses, business expenses, you now have what we call the net profit. So make it simple. Your business income minus all the expenses will give you a rough idea of what your your you know the profit or loss of the businesses. Now, this is absolutely important. If you have a business, especially if you are just starting, you need to do what we call, you need to have a cash flow forecast and a profit and loss account forecast, because that would determine whether you are actually making money or whether your business is successful or is going to survive. Those are things that are important. Now, I'm going to dwell a little bit more on invoices and receipts. Invoices and receipts. So you need to keep records of invoices issued to customers and receipts for purchases, right? And this is absolutely crucial for tracking your sales, tracking your expenses, and for tax purposes. Now, remember, invoices and all this kind of income and expense records, you have to retain this for at least 3 years after the filing date of the associated tax return, right? So these are some of the key things. Now, so this will lead me to what I call bookkeeping. Bookkeeping is a way that you basically track your invoices and your receipts, right? So you can either use a software for bookkeeping, or you can do it manually. There are two ways that you can do bookkeeping. You can use either a software, or you can use a spreadsheets, right? Now, so let me break it down a little bit. If you are using a software, there are so many software you can use. You have QuickBooks, you have Xero, and all those things. You can use all of them. Now, this is my advice, and I tell people this thing all the time. I say it. If you want to do your own bookkeeping using QuickBooks or Xero or whatever the case may be, you have to make sure that you are suitably trained, right, and qualified to do it. Because what is going to happen is that if you don't have the skills and expertise, you are going to mess things up, and you are going to spend more money to fix a problem that you have caused, right? So again, in 18 years of public practice, I have seen this time and time and time again. I repeat, if you want to do your own bookkeeping using a software like QuickBooks, you have to make sure that you are qualified and trained and have the expertise in bookkeeping. But let me tell you guys the reality. If you want to be a successful business owner, don't waste your time on things like QuickBooks. You will just be wasting your time. The time it takes for you to train yourself to do QuickBooks, that's the time that you could have been using to develop your skills, do more marketing, and grow and expand your business. This is just my advice to any of those, to those who like to do certain things by themselves. There are things that will bulk you down and waste your time. It's not worth it, trust me, right? So you can either use software, or you can do bookkeeping manually, right? You can, for example, for some of my businesses, I always try to simplify my businesses, right? So always try to simplify your businesses. You can use what we call spreadsheets. If you are good with spreadsheets, you need to have, like, for my clients, for example, if I'm doing their taxes, I give them a customized a spreadsheet. It's so easy for them to just enter in all their expenses and income, very easy. And I give it to them free of charge, and they enter all the information there, and they give it to me, and I use that to do the taxes, right? So, okay, somebody says, what do I suggest then? Right? So, I think I'm going to stop here with regards to what I had to do, and then I had to say, and then I'm going to deal with the questions, right? So, let me go to the question section now. So this is time for Q&A section, right? So let's go through the questions that you guys have. Let me see, what was the first question? Right. So OMG, I struggled to pronounce that. So she's asking that, so how do you pay for your personal stuff? Right? I'm new to understanding. So it's simple. If you have a business, right? Okay, if you have a business and So if you have a business, ideally you want to leverage a business credit card all the time. Remember, wealthy people leverage debt to make more money. You don't want to use your money except unless if it is really necessary, right? So which means that what? You need to separate your business income from your personal income. Most people, like when I started my business, I had a job, right? Now, when you want to start a business, you need to make sure that you separate your business income. If you have a job, your business income from your employment income. So income from your job and income from your business. Ideally, you want the business income to be paid into a business account. But again, I need to break it down a little bit so that you can understand. Now, some people are paid because it really depends on the type of business you have. So, that's why I would never give general advice. So if you have, for example, a 1099 income, so if you are paid as an independent contractor through a 1099 NEC, generally you can get paid through you as an individual, or you can get paid through an LLC with a 1099, right? So let's assume that if you don't have an LLC and the 1099 income is paid into your personal bank account, this is what I recommend. The income is going to hit your personal bank account because it is you. That is fine. Don't worry about the income reporting because the income on the 1099 has already been reported to the IRS. So you don't have anything to do. You don't have any, except if you had other income that were outside of the 1099, then you have to report them, right? So if you got paid through 1099, you don't need to worry about reporting because that income has already been reported to the IRS. And if you don't include that income in your tax return, you are going to get audited, right? So let's take this example. This guy gets paid through a 1099 as an independent contractor, and they want to record their business expenses. What do they want to do? How do they have to go about it? So I think this is the best way to look at this scenario and to answer the question. So if you get paid through a 1099, I would recommend use a dedicated personal credit card for that business. And this is a strategy. You are going to use a credit card with a zero balance. You use it only for that 1099 business or income business, right? Make sure that you don't use that dedicated credit card for your personal expenses. That would be commingling of funds. So you only use that dedicated personal credit card for your business. So if you're traveling, paying for flight tickets, whatever for your trip or hotel accommodation and all those kind of stuff, then you pay them with that credit card. Any annual fees on that credit card becomes a tax write-off. Any interest payments on that credit card becomes a tax write-off now. Right? So who is blessed so far? Who is blessed? These are basic things that we all need to understand. But many people now are social media gurus and everybody claims to know. And many of these guys just confuse everybody. It's crazy out there. It's really crazy. You have to take care of yourself. Don't just allow random people to be saying random things and confuse everybody, right? So did that answer your question? So you always have to separate. Now, if you have an LLC, when you have an LLC, the right thing to do is to get an EIN and then open a bank account for the business. And when you're opening the bank account for your business, apply for a credit card at the same time so that if they had to run your credit report, they don't have to run it twice. So when you open a business, get an EIN and then open an account with the bank. At the same time, you request you apply for a credit card so that they don't have to run your report twice. Now, this is what I would recommend, right? So I'm not sure, Omi, did I answer your question, right? And like I said, if you have an LLC, you would have a business account, right? Which is totally separate, where you can record all your income and all your expenses and all those things, bank transactions, right? So let's see, what's the next question? Sha- Shanae says, Nurse Boss J says that. Now she's asking a tricky question. She says, does it matter if you bought the car under your personal name and not the business name? So, you see, remember, when you have a car, right, you can either claim actual expenses of running the car or you can claim mileage, right? You can either claim actual expenses or you can claim mileage. Now, think about it. If you have a car, right, the strategy that you decide to use, because if you are claiming actual expenses, you cannot go back to mileage, right? That's how it works. And if you're claiming a mileage, you can alternate with actual expenses and so on. But let me kind of help you out. When you have a car, right, number one, you have to decide, do I want to buy this car through the business or do I want to buy it in my name or whatever? You don't just buy a car for the sake of buying a car if your business is not stable. I do not recommend that. Before you want to get into buying a car, you have to make sure that you have stable income to pay for the car loan, right? That is what I call you have to be wise. You don't just go buying things. You see, wealthy people do things. They think about things from a tax advantage perspective, which means that anything that I do, I always ask myself the question, what is the tax benefit that I'm getting from this strategy? So if you are going to get a car, it's easy. Think about it. For 2024, it's going to be 67 cents per mile. Do you know that you can effectively be claiming over $10,000 as a tax credit? I spoke about this during our last meeting. If you are doing 15,000 business miles, you can be claiming over $10,000 every year for your business until the day you die, right? Or until the day your business ceases. This is tremendous tax write-offs. Business miles is one of the easiest things to do. But remember record keeping, right? So yes, so to be honest, it doesn't really matter whether you bought the car in your personal name or in the business name. It doesn't really matter. You will have to decide, do I want to claim business miles or do I want to claim actual expenses, right? So again, if you are claiming actual expenses, then you would have to decide, is the car being used for business 50% of the time or 40% of the time? So with the actual expenses, you are going to get, if the car is used for business 40% of the time, you are going to get 40% of all the actual expenses of running the car, including like the interest on the finance or whatever, gas and all those kind of stuff, actual expenses, right? So whether actual expenses will give you a better outcome or business miles, it really depends. Because if you are doing Section 179 depreciation, this is a tremendous tax write-off that you're going to get, which business mileage would not give you, right? So I hope that answered the question. So let's go to the next one, because I'm already, it's longer than I expected, right? It's taking longer than I expected. So somebody asked, OEMG asked, what do I suggest then? So what was the question again? So was your question with regards to, is it better to use QuickBooks or is it better to use Excel or is it better to outsource it to somebody? So I assume that's what you meant, right? So to answer your question, this is what I would suggest. Now, this is kind of what I would suggest. If you have a business and you just started the business, you have a lot of free time in your hands, you don't really know what to do, you can decide to train yourself. In QuickBooks, they have things where you can learn how to train that. Just to keep yourself busy, you can do that, right? But the truth is that if you just started a business, from my experience, you can pay somebody to do QuickBooks. Some people can charge $100 a month, but think about it. If you are going to spend 50 hours trying to understand QuickBooks because you want to save $100, to me, it doesn't make any financial sense. So I would rather recommend you pay someone to do it for you, right? And you can focus more on marketing your business, social media campaigns, and all those things to make more money. That's what I recommend. Now, to kind of answer, to see whether I'm trying to answer the question right. So let's assume you wanted to find out whether it's better to use QuickBooks or Excel. Again, it depends. Now, this is what I generally say. If your business is kind of a complex business with a high volume of transactions, if you're a pharmacist, if you have a business with a high volume of transactions and all those things, complex business structure, right, then you will be better off using QuickBooks. But if you have a simple business where it's so easy to track your income and expenses, then use Excel. If it's simple, you are just tracking your income and expenses, then use Excel. Make your life simple, right? But the question, do you know how to use Excel, right? Again, Excel is easier to learn Excel than QuickBooks anyways, right? So I hope that answered the question. Okay. Now, so again, if you use, okay, Shanae says that what if you bought your car in your personal name and not the business name? Can we write off depreciation? So as long as you have business use, so if you are using really ideally you want to be claiming, you want to be using the car for at least 50% business use. But remember, you don't just choose to claim depreciation because you feel that it is the best strategy. You also have to consider in year 1, what am I going to get as depreciation? In year 2, what am I going to get as depreciation in year 3, right? So you don't just look at the short-term benefits. You have to look in the first 2 or 3 years. What will be the total depreciation that I'm going to get versus using mileage? Remember, if you are doing 50,000 miles, let's do the math, right? If you are doing 15,000 miles, right, times 0.67, that's easily $10,000 in tax write-off. So effectively, you can get $10,000 every year for 5 years. That's $50,000. But if you were using depreciation, remember, because the car is, you are using it part for business, you are not going to get the 100% depreciation. You are only going to get, but I recommend you always have to use the car for at least 50% business use, right? Now, I don't determine whether you are using it 50% for your business, right? Again, this takes us to record keeping. Before you're claiming all of these things, you need to make sure that you have the appropriate records, in place. Otherwise, if you get audited, you are going to be in trouble, right? So Danielle Amu says she's been messing up. So tell us the story, Danielle. So where have you been messing up that you want me to help you out? So I'm going to take only 2 more questions and then we'll call it a day for today, right? It's gone longer than I expected. Sorry about that. Again, I joined a little bit late just because I was in a meeting with an investor who were trying to strike a deal. So sorry about that. So yes, I'm only going to take 2 more questions and that's it. Danielle Amu says she's been messing up. If you don't mind sharing with us, please. I like to hear stories, right? If you are still there, please share with us if you don't mind. If anybody has a question, just put it in the chat there. I'm going to stop in the next maximum 5 minutes, right? Any questions? Let's see. Okay, let's see. Levanda, Beauty, welcome. Shandov, welcome. Right, it's good to have you on board. Now, like I said, for those who are joining for the first time, right, and who do not know me, I've been an accountant for 18 years. I'm also a finance expert and tax strategist. I've been helping so many clients in the last 18 years. I love what I do. I love taxes. I know, right? Thank God I never became a doctor as I thought. Right, awesome. So let's see here. Let's see. Who has a question? Oh, there you go. I can see some questions here. It says, no new car, lease buyout. I need an appointment ASAP, right? Now, usually I like to give, I hate giving general advice just because obviously of my background as an expert. I do understand. Look, let me tell you guys, As an accountant, I am expected, my regulatory, I am regulated, right? I don't want to lose my license. So my professional body expects me to exercise due skill, care, and diligence, not just to give random advice, right? So Shanae is again, we can talk about it in another session, right? So if it's a lease buyout, right? Okay. Now those are things that you really, we need to deal with it on a case by case basis, because you don't just do things randomly, right? So we can talk about that on a case by case basis. So let's see here. Um, let's see. I'm in I'm in a deer in headlights when it comes to this stuff. I've been playing with Excel. What do you need? What do you mean by that, Shanae? Right now, like I said, if your business is not complex, right, there is nothing wrong with using spreadsheets. I use spreadsheets for to be honest, all of my businesses. Again, the advantage I have is that I've been an accountant for 18 years, so I easily know how to navigate these things, right? But again, for one of my businesses, I'll be transitioning to QuickBooks, right? Because of the complexity associated with that business and the volume of transactions that I'll be expecting, right? Things are going to be, it's going to be great, guys, right? So, any more questions? Any more questions? We're going to stop in the next 2 minutes. Any final question? Right, if you are enjoying the session, just say yes. If you're enjoying the session, say yes. If I've been a blessing to you, say yes. Again, please invite your friends. If you have friends who are business owners, please feel free to pass my information to them, right? So that they can also benefit from from me. I'm going to, for those who don't have the link in my bio, I'm just going to share with you guys the link in my bio, that you can share with your friends, right? It's easy to share this with your friends. It has everything there. Let me go here. I'm going to put it in the chat box, right? So it's there. So that's the link in my bio. It says share. Oh dear. Let me see. How do I do that? Let me post. Okay, there you go. So that link in my bio, it has every information. It has everything about me. It tells you about Jerry. You can click it there. It has my business card, my e-business card, right? You please feel free to share with your friends. Paying taxes is a choice. You don't have to pay taxes. You don't have to pay taxes. Paying taxes is a choice. As a matter of fact, my tax bill last tax season was crazy. I hated it. I had to give Uncle Sam nearly 30,000 I was very upset about it, right? But again, my goal is to get to the 0% tax rate. I could have gotten there, but I had to do certain things. That's why I had to leave it as it is, right? But again, what I'm saying is that paying taxes is a choice. Paying 0% is a choice. Paying 20% is a choice. Paying 30% is a choice, right? But you can effectively get to zero if you want to. Talk to me. We can talk about that, right? So please share my information with all your friends, and it'll be a pleasure to be a blessing to them. It's going to be a pleasure to help them out, right? So, guys, it's been great to have you guys. I'm going to post today's recording on my page on Instagram. Please share with your friends, share with your loved ones, right? People need to be blessed. Don't just keep the blessing to yourself, right? People need to be blessed, right? So who had a fun, who enjoyed today's session? If you enjoyed today's session, yes, then we call it a day, right? Yes. Again, if you are not reaching your goals, I've not met some of my goals, so I have to discipline myself more, right? Don't give up. Don't quit. It's never over until it is over, right? Do not stop doing what you're doing. Keep doing. Just try to be the best version of yourself. You are not competing with anyone, right? Just try to be the best version of yourself. Don't give up. And I tell people, don't give up. Stay in your lane. Stay in your lane. Just keep going on. Don't give up, right? So I'm going to stop here, guys. You guys have a blessed week. Set your goals. Just stick to your plan. Even if you don't hit certain goals, it is fine. But don't just stay there. Do something different, right? So, guys, you have a blessed rest of the week. And we are going to the next level. Again, if you guys have a topic that you want me to talk about, you just feel free to DM me and I can talk about it. We have different things we're going to be talking about, right? So you guys have a blessed Sunday and a blessed week, and we'll catch up next week by the grace of God. Let's see.